Welcome back to the Daily Stack. Today, it's September 27th, 2025. This show is not financial advice. If it were, we'd open every episode with a drum roll and a waiver that says, by listening you agree to name your firstborn Satoshi, settle all disputes in Discord, and tip your barber in Dogecoin. Nobody wants that paperwork.
Mueve la cintura, it's a digital fiesta, crypto worldwide, no hay frontera. Bailemos juntos, the chain connects us, dinero nuevo, futuro en la mesa. Bitcoin bouncing, wallets be glowing, altcoins running, the rivers be flowing. Charts go loco, mean dreams growing, to the moon, baby markets exploding.
Today's story is about a bridge finally being built between two worlds that have spent a decade pretending the other didn't exist. On one side, you got Wall Street in a press suit, speaking in acronyms and fees. On the other, crypto in a hoodie and flip-flops, bragging about decentralization while trying not to spill cold brew on the keyboard. In the middle, until now, was a muddy river with no reliable access to cross. That bridge is starting to take shape, thanks to two big moves. Morgan Stanley is about to let millions of its E-Trade customers buy crypto inside the app they already use. And the US government just passed the Genius Act, the first serious rulebook for stablecoins. Put those two together, and you have both the doorway and the pavement for mainstream investors to step into crypto without feeling like they're wandering into the Wild West. Picture your brokerage account as a giant department store. For decades, it stocked all the familiar stuff: stocks, bonds, mutual funds, boring but safe. Crypto, meanwhile, was like a neon-lit kiosk outside the parking lot run by someone in a hoodie who swore they had the best deals but only accepted QR codes. Now Morgan Stanley is saying, alright, bring the kiosk inside, give it a proper counter and a cash register. Starting early 2026, E-Trade customers will be able to buy Bitcoin, Ethereum, and Solana right next to their Apple or Pepsi stock. Morgan Stanley isn't doing the heavy lifting themselves. They're partnering with Zero Hash, a crypto infrastructure company that handles the secure storage of coins, processes trades, and makes sure the plumbing behind the walls actually works.
Up to this point, Morgan Stanley, Goldman Sachs, and JP Morgan, they offered exposure to Bitcoin through the ETF wrapper. So that would be through like Mike Novogratz's firm Galaxy. But they have never decided to go direct and provide direct access to Bitcoin trading, Solana, Ether trading, which they will do in the coming months. And so Morgan Stanley's plan specifically is to offer it through E-Trade and to offer this access through their E-Trade clients through a little startup called Zero Hash. And another interesting aspect of that is Zero Hash, it's been around for 7 or 8 years, but now it's actually gotten institutional backing. They are now partly owned by Morgan Stanley, partly owned by SoFi and Apollo. So it seems like they've decided they're expressing an opinion about this company being an infrastructure play that will allow banks and fintechs to connect to the crypto economy.
For years, the big banks acted as if crypto was contagious, keeping it at arm's length, while apps like Coinbase and Robinhood became the default on-ramps for the curious. Now, for the first time, a major brokerage is inviting crypto into the same lobby as your stock portfolio.
For the election, for instance, they would say, we can't do it, we can't custody, regulation's very clear. And so now with the sea change in terms of, the regulatory environment, they're saying we can do it now. We're interested in stable coins, we're interested in tokenized assets, and obviously trading crypto, which is sort of the least interesting part of it.
For a casual investor, that's a game changer. One fewer passwords to remember, one fewer apps to download, and no sense of venturing into a sketchy back alley just to buy a little Bitcoin. Building a new aisle in the department store isn't enough if the cash register is unreliable, and that's where the stablecoins come in. If you're new here, stablecoins are digital tokens that stay pegged to the US dollar. They're the bridge currency that lets you move in and out of crypto quickly without waiting days for a bank transfer. The problem has been that not all stablecoins were actually stable. Some were backed by cash, and some by short-term treasuries, other by riskier bets, and transparency was often optional. Think of the last decade of stablecoins like a row of food trucks. Some were clean, some were sketchy, most had no official health inspection sticker. Traders ate there anyways because it was fast and cheap, but nobody felt great about the kitchen. This summer, the US government finally rolled out the Genius Act, which is basically a health code for digital dollars. If a company wants to issue a payment stablecoin, it now has to keep 100% of the reserves in cash or short-term US treasuries, publish monthly audits that anyone can read, and accept that coins are legally defined as payment tokens, not securities or commodities. This means less legal gray area, more accountability, and more room for big banks and fintechs to jump in without worrying about lawsuits or regulatory turf wars. In plain English, if an issuer says their coin is worth $1, they now have to actually have the dollar in the vault or treasury bill to prove it. No more, trust me, bro. Put these two developments together, and you can see why this is a genuine bridge. Morgan Stanley's move is the on-ramp. Millions of people who would never create a crypto-only account will suddenly find Bitcoin and Ethereum sitting next to their stocks. The Genius Act is the pavement. It makes the stablecoins that move money between banks and crypto platforms more trustworthy and bank-friendly. Without stablecoin rules, the on-ramp would be too shaky to drive on. Without the on-ramp, the pavement would just sit there unused. Imagine a regular E-Trade user in 2026. She logs in to check her Tesla shares, notices a crypto tab, and decides to buy some Bitcoin. The money moves into a compliant, audited stablecoin, gets converted into Bitcoin, and now can be sold back to dollars, all without leaving the brokerage app. For her, it feels like a new aisle in the same store, not a sketchy side quest. That's the big psychological shift. Crypto stops being a side hustle or separate hobby and just becomes another asset sitting under the same roof as stocks and bonds. There are still questions worth watching. Will Morgan Stanley charge higher fees than crypto exchanges, or will it try to compete on price? Now that the rules are clear, which banks will launch their own stablecoins and how quickly? And maybe the biggest question, do most people trust crypto more when it's wearing a Morgan Stanley badge and backed by regulated digital dollars? If all those pieces line up, 2026 could be the year crypto stops feeling like a frontier experiment and starts acting like a part of mainstream finance. And that brings us to the tip of the day. If you're new to crypto, don't start by trying to decode every token under the sun. Start by understanding stablecoins. They're the training wheels of this market. Less volatile, easy to grasp, and they're the rails you'll ride every time you move money in or out. Learn what keeps them stable, how the new rules protect you, and you'll feel a lot less spooked by the rest of the market's ups and downs. That's the stack for today. The banker builds the bridge, the government lays the pavement, and the average investor might soon be able to cross without leaving their usual app. Next time you open your brokerage account, don't be surprised if Bitcoin is sitting there in a suit and tie. Only ever click the official hardware link in the episode description. Skip Discord promos, Twitter DMs, or meme giveaway hypes. Your keys remain sacred. So stack smart, stack daily, and I'll see you degens tomorrow.
Digits on digits, no sleep, just hustle. Worldwide grind from Tokyo to Brussels. Blockchain ticket.